At this time, Dr. Jody Campiche will provide the much-anticipated Economic Outlook and Planning Intention Survey results.
Good morning. Thank you for the opportunity to present the National Cotton Council's Economic Outlook for the U.S. and world cotton markets. This past year was characterized by significant uncertainty and volatility in both the global economy and the world cotton market. The most challenging issue facing the global cotton market in 2020 was the COVID pandemic. The pandemic caused unprecedented disruptions in the supply chains and markets for the U.S. and world cotton markets. The COVID pandemic resulted in a contraction in the U.S. and world economy in the first half of 2020, followed by a partial recovery in the second half of the year. In early 2021, world mill use appears to be recovering at a faster rate than originally expected, following an 18 million bale decline in the 2019 crop year. A recovery in demand, along with increased purchases of U.S. cotton as part of the U.S.-China trade agreement, has allowed the U.S. share of Chinese imports to rebound to the level prior to the trade dispute. Looking a bit further down the supply chain, specifically at U.S. retail, consumer spending on clothing and clothing accessories remains well below pre-COVID levels. On a quarterly basis, U.S. Census Bureau data allows us to compare in-store sales with e-commerce or online transactions. The Q1 and Q2 data clearly illustrate the devastation that occurred in the March to May 2020 timeframe. The combination of forced closures of retail outlets and textile mills and stay-at-home orders led to a significant reduction in spending on clothing and clothing accessories. During the second quarter of 2020, in-store sales were $38 billion lower than year-ago levels. While online sales increased during this time, the bump was not enough to offset the loss in retail store sales. So although the retail recovery has been a little better than expected, in-store sales in the fourth quarter of 2020 were still $10.5 billion lower than a year ago, while online sales were $3.6 billion higher. When combined, total sales were almost $7 billion lower than the fourth quarter of 2019. Because of the pandemic, USDA made a significant reduction in 2019 crop year world mill use between their March and May estimates. Looking back to their initial estimate in May 2019, USDA was projecting world mill use of 126 million bales. World consumption of 102 million bales for the 2019 crop year was the lowest level since 2003 and 18 million bales lower than in 2018. So while a recovery in mill use is occurring during the 2020 crop year, the ongoing COVID disruptions have resulted in a 2020 estimate well below pre-COVID levels. In the latest USDA report, 2020 world consumption was increased to 117.2 million bales, mostly due to a 1 million bale increase in China, along with smaller increases in India and Pakistan. For the United States, the latest USDA production estimate is 15 million bales, which is 4.9 million bales lower than in 2019. The latest ginning report shows that 14.4 million bales have been ginned, so the final U.S. crop could come in a bit lower than 15 million bales. Lower acreage, combined with the combination of adverse weather events, led to the lower U.S. crop. USDA's mill use estimate of 2.4 million bales for the 2020 crop year is in line with the Council's own mill use surveys. The 2020 number represents a slight recovery from the 2019 crop, but remains well below pre-COVID levels. In the U.S. balance sheet, we believe current export commitment and shipment data support a stronger export number than the latest USDA estimate. U.S. exports are projected at 15.8 million bales, as compared to USDA's latest estimate of 15.5 million. As a result of a large carryover from the 2019 crop year and increased purchases from China, U.S. export commitments and shipments have been very strong for the 2020 crop year. As of February 4th, total commitments reached 14.1 million bales, while 7.8 million bales have been shipped. Weekly shipments reached a marketing year high for the week ending February 4th. Current commitments are at the highest level at this point in the marketing year since the 2010 crop year. The stronger export number results in U.S. stocks of 4.1 million bales, which represents a significant drawdown by the end of the current crop year. So with that review in mind, the projections for the 2021 marketing year will begin with the outlook for U.S. production. As in past years, the prospects for the U.S. crop are based on the results of the NCC Planting Intentions Survey with assumptions made for abandonment and yields. Surveys were distributed on December 15th and responses were collected through mid-January. Respondents are asked to give their plantings of cotton, corn, soybeans, and other crops for 2020 and intended acreage for 2021. So once again, it's important to remember that the survey is a snapshot in time based on grower intentions. Changes in markets and weather will cause actual plantings to differ from early season intentions. So as we look ahead to projected prices for the 2021 crop year, cotton harvest time futures contracts as of early February are currently trading at much higher levels than last year. For 2021, the table shows the average futures prices during the survey period. It's worth noting that the current cotton prices have increased by another 7 cents from the average during the survey period. Competing crop prices are also above year-ago levels, with soybean prices showing the most significant increase. During the survey period, the cotton to corn price ratio was higher than in 2020, while the cotton to soybean price ratio was lower. It's important to call attention to the ratios because experience has shown that these ratios are reliable indicators of changes in cotton acreage. A review of the Council's survey will begin with a look at the Southeast. So in the Southeast, survey results indicate a 4.2% decrease in the region's upland area to 2.3 million acres. Cotton acreage is expected to decline in Alabama, Florida, Georgia, and Virginia, and increase in North Carolina and South Carolina. In Alabama, the survey responses indicate a 9.3% decrease in cotton acreage, an increase in corn, wheat, soybeans, and a decline in peanuts. In Florida, respondents indicated slightly less cotton and soybeans and more corn and peanuts. In Georgia, cotton acreage is expected to decline by 8.6% to 1.1 million. Georgia growers expect to plant more corn, wheat, soybeans, and peanuts. In North Carolina, a 13.4% increase in cotton acreage is expected, due in part to higher levels of prevented plantings in 2020. In South Carolina, acreage is expected to increase by 2.6%. South Carolina growers expect to plant more corn, soybeans, wheat, and peanuts. Cotton acreage is expected to decline by 10% in Virginia as growers intend to plant more corn, soybeans, and peanuts. So looking at the Mid-South, growers have demonstrated their ability to adjust acreage based on market signals. The relative prices and potential returns of competing crops play a significant role in cotton acreage. Mid-South growers intend to plant 1.7 million acres, a decline of 3.7% from the previous year. Survey results suggest that the decrease in cotton acreage can be attributed to a shift to corn and soybeans. Across the region, all states intend to decrease cotton acreage. In Arkansas, acreage is expected to decline by 6.8% to 489,000 acres. Louisiana growers expect to plant 161,000, which is 5.6% lower than last year. In Mississippi, respondents expect to plant 521,000, which is 1.6% lower than last year. Missouri growers expect to increase cotton by 1.2% to 299,000 acres and plant more corn and less soybeans. In Tennessee, cotton acreage is expected to decline by 6.1% to 263,000 as land shifts to corn, soybeans, and wheat. So growers in the Southwest intend to plant 7.1 million acres of cotton, a decline of 5.5%. Increases in cotton area is expected in Kansas, and a decline is expected in Oklahoma and Texas. In Kansas, producers intend to plant 0.9% more cotton acreage in 2021. In Oklahoma, a 5.2% decrease in cotton acreage is expected, with the survey indicating a shift into wheat. Overall, Texas acreage is expected to decline by 5.7%. In South Texas, respondents indicate a relatively small decrease of 1.6%. Respondents from the Blacklands indicate a decline of 16.2% in cotton acreage, an increase in corn, wheat, and sorghum. In West Texas, respondents indicated a decline of 5.9% in cotton and a slight increase in corn, with larger increases in wheat and sorghum. So in the West, with intentions of 197,000 acres, producers expect to plant 2.5% less cotton in 2021. Cotton acreage is expected to decrease in Arizona and California and increase slightly in New Mexico. The survey results for Arizona suggest a slight decrease in upland cotton acreage and an increase in wheat and other crops. In California, growers intend to plant 17.7% less upland cotton and more wheat. In New Mexico, cotton acreage is expected to increase by 3.2% in 2021. New Mexico growers intend to plant less wheat in 2021. So when we sum across the four regions, we have an intended 2021 upland cotton area of 11.3 million acres, which is 4.9% below 2020. So overall, the survey indicates that growers intend to plant less ELS cotton in 2021. California growers expect to plant 26.7% less ELS cotton, while Arizona growers expect to plant 19.8% more in 2021. New Mexico ELS acreage is expected to remain unchanged, while Texas growers expect to decrease ELS acreage by 10.5%, mostly due to concerns about water availability. So summing together the upland and ELS cotton intentions shows U.S. all cotton plantings in 2021 of 11.5 million acres. It's 5.2% lower than in 2020. So between now and planting time, changes in relative market prices and weather developments can alter final decisions, but we think these survey results provide an accurate picture of overall intentions. So planted acreage is just one of the factors that will determine supplies of cotton and cottonseed. Ultimately, weather events, insect pressures, play a significant role in determining crop size. Since the NCC Economic Outlook does not attempt to forecast weather patterns, the standard convention is to assume yields in line with recent trends and abandonment consistent with historical averages. However, looking at the latest U.S. Drought Monitor map, and considering that La Nina conditions are predicted throughout the winter, Texas abandonment could be higher than average in 2021. Water availability in California will also play an important role in final acreage numbers for the West region. So with average abandonment for the U.S. estimated at 18.1%, Cotton Belt harvested area totals 9.4 million acres. Using an average 2021 U.S. yield of 855 pounds generates a cotton crop of 16.7 million, with 16.3 million bales of upland and 431,000 bales of ELS. The USDA estimate for 2020 cottonseed production was 4.6 million tons, down 1 million tons from the previous year. For the 2021 crop year, cottonseed production is projected to increase to 5.2 million tons. So turning our attention to the U.S. balance sheet, projected U.S. production of 16.7 million bales is 1.7 million higher than 2020. So NCC projects a partial recovery in domestic mill use of cotton at 2.8 million bales for the 2021 marketing year. As one of the largest users of U.S. cotton, U.S. mills continue to be critically important to the health of the cotton industry. In the face of rising textile imports from Asian suppliers, the U.S. textile industry has focused on new investment and technology adoption in order to remain competitive. So now let's transition to the world market in order to determine the outlook for U.S. cotton exports. In the most recent monthly estimates, USDA increased China's production, mill use, and imports for the 2020 crop year. With a smaller crop expected in 2021 and continued growth in mill use, China is expected to increase imports to 11.5 million bales in the 2021 crop year. However, the outlook regarding China could be impacted by major policy developments. One is the continued implementation of the Phase 1 agreement. The second is the U.S. government's increased focus on addressing forced labor issues in the Xinjiang region, where most of the cotton is produced. The most recent withhold release order issued for cotton and all products from the Xinjiang region will likely have a significant impact on the global textile and apparel supply chain. As of early February, the full impacts of these new restrictions on the world cotton market are unclear. Bangladesh and Vietnam continue to increase imports as their textile and clothing industry expands. India's imports are expected to decline in 2020 and 2021. The Indian government recently announced a 10% duty on cotton fiber imports to potentially support local prices and higher domestic production. Pakistan continues to be a larger importer of cotton as a result of lower production and strong demand for better grades of cotton for blending and producing export-oriented quality textile products. Pakistan's production continues to be impacted by various issues, including low-quality seeds, with 2020 production at the lowest level since the mid-'80s. So with expanding cotton acreage in Brazil, a slight rebound in Australia's production, and increasing stocks in India, the U.S. will continue to face strong export competition in the 2021 crop year and in the foreseeable future. Brazil continues to make improvements to infrastructure, allowing for more efficient transportation of cotton. Despite the challenges in 2020, the U.S. did have increased opportunities for export sales to other markets in the 2020 crop year, particularly in Pakistan and Turkey. So during the 2020 crop year, the Indian government has increased purchases of Indian cotton under the Minimum Support Price program, resulting in less cotton available to export. As of the end of January 2021, the Indian government had purchased 9.4 million bales under the MSP, or Minimum Support Price program. As a result of the increased purchases under the MSP in the 2019 and the 2020 crop years, Indian stocks have reached a record level. The management of these stocks by the Indian government will be a major factor to watch in 2021. Uzbekistan has drastically reduced cotton exports in recent years and was aiming to utilize all local cotton production domestically as early as the 20 marketing year. From 2005 to 2015, Uzbekistan exported an average of 3.2 million bales per year. Now, with the expansion of the Uzbek textile industry, mill use has been rapidly expanding, and domestic cotton production is now almost entirely consumed by domestic mills. A further expansion of the Uzbek textile industry will require them to increase cotton production or become a cotton importer, which is a very interesting dynamic since they have not previously imported raw cotton. So when combining the trade changes of other countries, U.S. exports are projected to drop slightly to 15.4 million bales in the 2021 marketing year. With large stocks in other major exporting countries and a partial recovery in Australia's production, the U.S. will continue to face strong export competition in 2021. When combined with U.S. mill use, total offtake falls short of expected production, and ending stocks are projected at 2.6 million bales. If realized, U.S. stocks represent one of the lowest levels in the last 20 years. So for the 2021 marketing year, world area is projected to increase slightly in response to higher cotton prices. World production is estimated to increase by 1.5 million bales in 2021 to 115.6 million bales. World mill use is projected to increase to 120.9 million bales for the 2021 crop year, while world trade is estimated to increase to 46 million bales. World ending stocks are projected to decline by 5.4 million bales in the 2021 marketing year to 90.4 million bales. While the world stock level was higher in the 2014 marketing year, the majority of stocks were held by China. Now the dynamics are different, and most of those stocks are held in two of the world's largest exporting countries. From 2018 to 2019, stocks outside of China increased by 20 million bales, with the largest increase of 8.6 million bales in India due to procurement under the MSP program. India and Brazil, the second and third largest exporters behind the U.S., have the highest level of stocks outside of China. So while the Council's economic outlook does not attempt to project cotton prices, it's important to review some of the factors shaping the current price situation. Although cotton prices were weaker in the first half of 2020 as compared to the previous year, prices had improved during the second half of the year. Prices have continued to strengthen in the first few weeks of 2021 and overall present the most bullish picture that we've seen since mid-2018. So, of course, with any projections, there are uncertainties and unknowns that can change the outcome. Although global stocks remain high, a tighter U.S. balance sheet, low supply chain inventories, increased purchases from China, speculative money flow, a weaker U.S. dollar, higher grain and oilseed prices, and post-COVID demand expectations are contributing to bullish sentiment for cotton prices. However, additional restrictions related to the COVID pandemic, large stocks outside of China, and low man-made fiber prices could put downward pressure on cotton prices in 2021. Mr. Chairman, that concludes my comments.